Hey everyone, welcome back to my channel. My name is Rian, and if this is your first time watching my videos, then welcome. I hope that you learned something. I hope that you will go away inspired. And if you are a returning viewer or a subscriber, I want to say thank you for the support. Thank you for watching my videos, and I hope that this video will help you out as well. I hope that you guys are ready for the week. It is Lunar New Year, here where I am based in South Korea, and we have off for a few days. But the markets they don't stop. So let's get right into it. So today I'm going to give an update on the battle of the dividend ETFs. I'm just going to show you how they are performing, what have they done exactly, over the past month. For those of you who don't know, I've started a 1-year challenge where, I'm letting different ETFs or growth and, high paying dividend ETFs, just a little basket of them, compete against each other. You can go and watch my video. It's in the channel just a few videos back. I'll see if I can add a link up here to it. But, you can go and check that out. So I'm going to go over that. I'm going to see, how did they perform over the first month. This is a 1-year challenge. And then also I will just talk a little bit about, what is going on in the market and what I think we can expect during this week and then also during this month and what our strategy is and how I will trade in this time. Just very quick, I am an eToro partner, so if you like what you see in this video, if you want to try eToro out, if you want to copy my portfolio on eToro, then please feel free to sign up on the sign up link in the description. Okay, so let's get into it. These are the 10 ETFs, and then also we have the one dividend growth, which is the copy portfolio of eToro. So you can see from face, just by looking at it, you can see that some of them have been doing, better than others. Just by looking at it, you can see that this one, which is the Asian one, which is based in the, or only contains companies that are based in Asia. They are doing well because they are not affected by, the current drawdown on the American markets. So, and you can see also, ones that are very highly impacted are like VIG, which is more like a growth dividend portfolio. So the companies in this ETF, are more growth orientated than, dividend orientated. So, it makes sense that, these ones would suffer more during a big sell-off like we are seeing now. But also, once some of these ETFs that contain like value companies, they tend to do a lot better, like HTV. And we can see that, I have received a dividend so far in exactly 1 month. I've opened all of these on the 31st of December. Today is the 31st of January, and you can see that only the one ETF has paid a dividend of $1.08, and then also, the dividend growth copy portfolio on eToro also had a single company that paid a dividend. So the total so far is 0.16. It's important to remember that usually companies pay dividends quarterly, but it can also be semi-annually or like biannually or even monthly. So it depends on the company's policy. Now, like I said, if one of the ETFs, companies or one of the companies inside that ETF pays a dividend, it will reflect through the dividend balance. Now, one thing that I'm not sure of is, if an ETF would reserve those dividends, and then only pay it like quarterly according to its own rules. If you know, please let me know because I'm not sure about that. But, as far as I think, and if I'm looking at what I'm seeing now with the SPHD, it looks like, there's only $1, dividend. So I think that, well, it's quite a lot. $1. Let's quickly look at this. $1, there's 1.08 divided by 500 times 100 is 0.2%. Yeah, I think that makes sense because, I think that definitely makes sense. If let's see how many companies does the SPHD have? SPHD ETF holdings. So let's look at how many companies they have. They have. Go to ETF.com. So if you scroll down, usually in the description, you would read it. Cherry picks the US equity market rather than delivering the whole basket. It includes 50 least volatile names chosen from a short list of the S&P 500, 75. All right, so it's 50 companies. So SPHD only chooses 50 from the 75 highest dividend yielding companies in the S&P 500. So it means that, that 0.2%, it means that it tells me that that's only one company's dividend. If you think about it, let's see, this ETF aims to return, what is the dividend yield? It aims to, look at that, 3.49%. So that's what it aims to, give like in a yearly distribution. So 0.2%, it might be one or two companies. You can do the math, but I think so. I'm inclined to think that the dividends, if a single company does inside that ETF pays a dividend, I'm inclined to think that it will be reflected in the ETF's dividend payouts. So it's not like it's reserved and then only paid like every quarter. But if I'm wrong, please let me know in the comments down below. I would love to learn more about that. Okay, so let's look at the Excel document that I've made. Okay, so let's look at this. So we can see that, overall, because this has been a very bad month in terms of the American markets, you can see that overall they have drawn down quite a lot. So my $5,000, have taken quite a beating. If we look at my overall invested, if you add up all of these values here, and you take that value and you divide it by 5,000 and you multiply by 100, you'll see that we actually have a drawdown of minus 17%, and that's mostly because of what is currently happening in the stock market. Also, you can see that, like I said before, some of them are doing well, some of them that hold a lot of value companies, some of them that have Asian exposure or only, Asian exposure or is only Asian. And then, look at these. So these are also high paying dividends. So it's mostly your value companies, etc. So you can see not doing that great at the moment, but again, this is only temporary, and the market should bottom out sometime soon, and we will see some potential growth. All right, then I only have the two dividends, like I said, the 0.16 from the dividend growth, and then also I have the $1.08 from the SPHD, and I have earned a total of $1.24 in dividend income. So yeah, it's quite exciting. Like I said, I expect quarterly, so I don't know when exactly the first quarter payout date is, but we will see it. We should probably see, all of these ETFs get a lot of, dividend distributions, and I think that month's update should be quite exciting. All right, now I'm going to talk about the market. So the markets are, it's just been a crazy January, and it's still on track to be the worst January since like forever in the history of the stock market. But if you follow me or if you follow my channel, you know that this is an excellent opportunity to dollar cost average into the RT investing copy portfolio on eToro. This week will be a big week. So there's a lot of companies that's going to release their earnings. And it's all the big companies. So we're going to have, if the companies like Facebook and Amazon, if those guys come out with good earnings, I truly believe that we might see the market fly. I don't know if it's going to be a sustainable rally, but it might rally. It might, spark a few, just good vibes into the market. But, overall, I still am a little bit bearish on the market for now because, I just, like I've explained in my previous videos, things are just overly inflated by the stimulus provided by the American government. So, I honestly feel like things have to come down a little bit more. But, if it rallies, it's just, making everyone feel a little bit good. But I don't think that's sustainable. It might be a dead cat bounce situation, and, which is still my play. So I'm going to log into RT Investing now, and I'm going to show you just, I have two orders that I've placed at certain key levels in anticipation for, any further corrections down, as I don't see, any real catalysts until end of March probably. So, I'm going to keep those buy orders open, and if we do drop, to those price targets, then, we will buy into the market, or RT Investing will buy into the market and increasing our exposure. But if not, then we have that cash on hand for if other opportunities, come along in the future. So let's quickly look at it. I'm going to log out. All right, so let's look at it quickly. All right, you can see, that things are still pretty red right throughout everything. There's a lot of drawdown. You can see crypto. There was a small little rally in crypto, even in our metaverse coins. You can see Axie had a good rally this morning, or even yesterday, and went up to 55. But now I see that it's just been rejected again. So if we switch to candle view, and let's go switch to candles, and let's go to 1 hour chart. You can see we had a good rally here, but it seems like we can't break through this 55 range. So that's where it went, and now it got rejected. So this was literally today, still the 31st. Look at that. We had a rally, and it just came down the past few hours, rejected once again from these levels. You can see it's the third time that it has been rejected at this level. So not a good sign for now. So, and I kind of expect the same thing in the stock market. If you look at the total stock market index, like I said, we might see a rally, but I doubt that would give it enough momentum. So we've seen a rally, and we have some good earnings. So if we break through this previous, if we break through, like I would say 220, 223, 220, somewhere around 223, I might start to think about things differently. But that is yet to be seen. We still have a long way to go to even get close to where we were before. All right, now what I've done is I have placed an order. So what you can do is you can click on orders on your own portfolio. Now what I've done is I've added 2 orders for VTI and VOO at VTI at 205 and 210. Well, the first one is at 210, second at 205, and VOO 365. First one, second one is at 373, and then I have a buy order for Bitcoin. Just a small amount to just take advantage of any possible price drops to 30K, and then also for Ethereum on 1750. Now I'm not going to go through all of them to explain these levels, but we can look at Bitcoin quickly, and I'll show you there is a big support at 30K, and it's also the place where we have bounced off previously. You can see that we've just bounced off. There's massive support at 30K, and that is my strategic placement. If we do drop below 30K, then it would just signal to me that things will get a lot worse, and I might put in some more buy orders as we dip even lower. But I don't foresee it going a lot lower than 30K. There's a lot of institutional money invested into Bitcoin now, and also mining, for the miners to break equal when they mine, so it costs electricity, and the difficulty level of Bitcoin just keeps on going up. So it takes longer to mine, it takes a lot more effort, and takes a lot more energy. So the cost that it costs to mine a Bitcoin goes up over time. So somewhere there is a point where it's not feasible for them. So if they mine that Bitcoin, it's not feasible to sell it for a lower price. So if they mine that Bitcoin, they just going to keep on hold on to it and just sell it for more, because that's just the way it works. So they won't be selling it at a loss. So that's the other factor that there is. So I don't foresee Bitcoin going into such a deep bear market winter, but anything is possible in this game. And if it does drop below 30K, then we will just buy even more. But I have placed the order there, so let's hope it touches that, and we get a good price. But again, if you are dollar cost averaging into the RT Invest portfolio, then this doesn't matter to you. You just keep on adding funds to the RT investing portfolio, and you would then in effect buy into all of these markets, including Bitcoin, at whatever price it is, and you would get the best average price for Bitcoin over time by just being consistent. But this is just me maintaining the RT investing portfolio, which is the blueprint portfolio. So the growth that I see on the RT investing portfolio might not be as good as the growth that you see on your RT investing copy if you dollar cost average into the copy. All right, so that's it from my side, guys. I hope this video helps. Like I've mentioned so many times before, just keep on dollar cost averaging into the RT Invest portfolio and just use this time where the markets are, just drawing down. Use this time to get your buying price as low as possible and just stay calm. And if this video helps, please give it a like, and then also please consider subscribing. And then also, if you are new to eToro, or if you like what you saw in this video and you want to sign up, you can find my sign up link in the description below. And I hope to see you guys in the next video. Thank you. Goodbye.